In this video, I'm going to show you my 3 favorite stocks for 2021, selling premium, writing covered calls, and selling cash secured puts. Now, I'm going to show you exactly how I trade these 3 stocks. So I want you to stick around. The final stock, I'm thinking about putting another 40 G's in. Hey, look, those 3 stocks start at about the 10-minute mark, but I'd hate you to miss all the good stuff I say before, where I talk to you about how I trade this market. Stick around. I know you're going to like this one. Hey, welcome back, everyone. It is time for another red hot covered call video. Well, hey, look, I'm back behind the mic. I'm excited because today we're going to talk about my 3 favorite stocks I use when writing covered calls. Now, I'm going to highlight 3 of them for you today, but do understand this is more about a strategy than the stocks, okay? And for me, the stocks fit into a strategy. Now, for a lot of you, you know that I use about 9 to 10 different selling premium strategies. And to be honest with you, it's more of a mindset. And I love using that to my advantage because it keeps me in the game. I always want to fall forward. I want to have success. So for me, these are the little things that I do. Now, we're going to talk about 3 stocks that I use and am using in 2021. I'm going to show you a stock I'm using now, a stock that I'm going to use, and of course, we're going to talk about one of my favorites for you small ball players that I'm currently thinking about doing a nice cash secure put. So I want you to stick around. Do understand when I talk about trading strategies, let me run through this. So everybody understands writing covered calls, selling cash secure puts. Well, within that, there are time frames and there are ways we do it. Now, the way I keep myself motivated and inspired to keep doing it week after week after week for the past 4.5 years, 5 years, is 1, it's a mindset. I'm in retirement. I'm technically not in retirement, but again, the mindset is I'm in retirement. I need to make income in retirement, okay? So the bills never take a day off, so I can't either. So for me, the way I approach this is this. There's strategy within strategy. I have weekly covered calls for those quick hit weekly covered calls, 7 to 10 days. Monthly, 30-day wheelhouse trades where I'm looking to use the 30-day time frame, try to collect 3 to 4%. That's my paying the bills trade. And I absolutely love using the big S&P 500 type companies for that. Then we have the 45-day to 3-month trade. Usually this trade is used when my first trade, the first 30-day trade, kind of goes south on me, where the stock falls, and for me to collect some premium that makes it profitable to keep this thing while it's down, I'll use the 3-month time frame so I can pick up that bigger premium. Sure, it is 3 months and it adds 3 months to the trade, but usually I'm able to wiggle my way out. I love using covered call with the dividend capture strategy where I buy that great stock that pays a fat dividend and I look to write a covered call, pick up a fat, juicy dividend that usually equals about half of what the covered call premium would. I tell you what, I love the covered call dividend capture strategy. Also love to use stocks to double my dividends, where these are buy and hold stocks where I'll use these stocks during non-event months. All I'm looking to do is write that 30-day out of the money, deep out of the money, 30 delta covered call to pick up what would be equivalent to a company's dividend. Love using the wheel. This is the cash secure put side of it, where I'm going to use the wheel, where I'm going to sell a 1-week cash secure put. I'm going to try to obtain the shares so I can then immediately write a covered call. It's called the wheel of profit as we sell premium each stage of the game. Now, I love using the cash secure put to cherry pick some premium where I have no expectations of picking up the shares. I just want the fat cash secure put premiums because the stock is getting clobbered because of the markets are down or maybe some bad news with the stock, and I believe the stock will recover. Tell you what, I've been very profitable with that. And of course, I love using the cash secure put and the covered call in combination. I can collect premium on both sides of the trade. If the stock goes higher, I'm able to keep that cash secure put premium. I hope to have my shares taken away, doubling the profit. So that's what we're going to talk about. 3 stocks today that I use in these various strategies. Again, a mindset. So if you like anything you hear here today, I want you to subscribe to the channel. It's right there and it's free. I come back every week. I give you timely and relevant covered call trades to up your game so you see a successful active trader doing it. You watch it once, you watch it twice. Next thing you know, you're comfortable. See, the more comfortable you get, the more likely you'll do it. And that's what I want you to do. I want you to get off the bench, do it, so you can get your experience. Now look, if you like anything you hear today, I want you to bang that like button. It lets me know you like what I'm doing. Now what we're doing is this, a little house cleaning, because before we get into those 3 stocks that I absolutely love and use and profit from, I want to do some house cleaning here. If you remember, a couple weeks ago I did a video where I am down 70 grand with that recent sell-off in the stock market. And a lot of people ask me, how you handling it, John? Well, the stocks that I owned had fallen some $70,000 collectively. Now, I'm holding the shares, so that's only on paper. And in fact, I wrote some covered calls, did some puts, things like that. We are trying to battle back. Hey, look, I'm not perfect. We find ourselves in bad spots every once in a while, and this was one of them. Now, Workhorse was one of those stocks, and Workhorse absolutely kicked me in the ribs when it rocketed to $40 a share. Then some news came out. The stock fell some 50%, catching me holding the shares at $19.75. The stock falls to some $16. I'm trying to wiggle out of this by writing some deep out of the money covered calls. Again, we're collecting premium, which is reducing our cost basis. Now, I don't like using my premium for cost basis reduction, but sometimes you have to because we're in trouble with a stock. This is why I always tell you, if you can, have multiple stocks so you're not stuck sitting on your hands when that one stock you've invested in is down so much that you can't sell premium against it. Now, with that said, it kept falling because good old Ride, for which Workhorse owns 10% of and is basically connected to the hip with them, has some serious bad news. So good old Workhorse fell all the way down below $10 a share just for a blip. But as it started to rally, now understand I haven't done anything with Workhorse because I'm in at 1977. Well, sure enough, on the day I decide to pick up a baby weekly crumb, because remember I have 1,000 shares. If I just write a baby crumb for 35 cents, yeah, that's $350. Well, I did that. I picked the 13 strike and absolutely, you can see with the chart there, it rallies off of that. Unbelievable, my timing. I literally write the covered call, pick up 35 cents, that's $350. I'm feeling good. This is a weekly call. No way this thing is getting to 13 bucks. Aftermarket, I get a text saying, hey bro, you see what's happening with Workhorse? It's up to $15. The Reddit crowd got a hold of it and rallied it higher. Now, I wasn't going to do anything stupid like buy it back and add 2 more bucks to my cost value, so we let it ride. And it never was able to get back down below my $13 strike. So I end up letting Workhorse go, largely because I'm sick of the meme EV space. I loved using it when it was good, but it's not good anymore, so I need to move on. And that's exactly what I did. So let me close this out here. Although I have my shares taken away at 13, with all of my cost basis reduction, with the premiums I've sold, I lose $6,700 on the stock itself being taken away from me at 13. Okay. But I've written so many covered calls on this thing since I've owned it. This bank of 1,000 shares, you can see that I'm able to offset that huge $6,700 loss with my covered call writing. Now, again, I hate using premium for this, but look, sometimes you just have to take an L. We have to sit back, reevaluate what we're doing. And that's what I've done here. I'm not getting involved in these EV stocks anymore, largely because I need to get back to what made me so successful here at the channel. I mean, look, I've been doing this for 5 years, knocking it down. I'm going to show you a picture here that's absolutely going to blow your mind, where this month is my first recorded negative month in almost 5 years. So this is amazing. So Workhorse is gone. We don't own Workhorse anymore. If you're in Workhorse, make sure you make good decisions, and I do wish you the very best. Now, I know this picture's small and you can't really see the numbers. You know, if you go over to Facebook and search CPT Dashboard, follow my group. I posted this up over the past couple days. This is amazing. This is my total income tracker over the past 5 years. Okay, 2016, I wasn't keeping numbers in my total income tracker. Since 2017, I've been keeping the numbers. And look at this. This is absolutely trades that I've opened, trades that I've closed. We move on. I don't look back. What you see here is a result of what I've been doing for the past 5 years. This is why I always tell you, get your experience. You won't need me anymore. Because when my mentor Jerry showed me the way, it was nothing but the moon. Selling premium is beautiful for cash flow and cash flow in retirement. This is what you can do. Well, this is what I'm doing. Look at that. That red dot is this month. And the reality is that workhorse trade absolutely turns out to be my very first L. I haven't been able to battle out of June 2021 to have a green month. Now, if you've been with the channel, you know that just this February, I broke an all-time record, some $24,000 in February. If you go back to my website, cptdashboard.com, I have it all there for you. And you can download my free total income tracker, and I want you to use that. So why do I show you this? I show you this largely because we can absolutely find ourselves in bad spots. I don't want you to be a half cup empty person. We're always half cup full. We're always trying to have a green trade. Now, my July is setting up to be an absolute blowout month because we're doing the things we have to do. And if you haven't noticed, the one thing I'm trying to do is get away those loosely traded stocks that, quite frankly, do not meet the criteria for what makes a great covered call, the golden rules of covered call writing. So let me go ahead and show you these 3 stocks that I'm using in 2021. Knock down the covered call profits. Now, what you're about to see here is what my members get all the time. If you're interested in anything you're about to see, I give you a 1 free month offer over at my website, cptdashboard.com. This is an off YouTube community that gets daily content, fresh ideas to help you up your game. And you have access to me, could ask me any questions, and the upgraded CTP dashboard and all of its 5 dashboards to help you find your next great cover call stock. And the wheel trade, I've already bought a stock off the wheel report, and I'll tell you what, absolutely love it. Found a great stock this week as well. Love using the tools that the upgraded CTP dashboard offers me. And I'm that guy. I want you to go over there and get your 1 free month. Now, I know you're saying, look, man, you got to get to it. Well, I am going to get to it. But look, we have to do some house cleaning here. If you remember, when I did that video where I was down 70 G's, well, since then, we have a couple things happening. One, workhorse is gone. So people are asking me, hey, look, how are you dealing with this? Well, I'm getting rid of the fluff. I'm getting rid of those stocks in my life that have made my life more stressful. I need to get back to what has made me great selling premium. You can see with the market finding its footing, the market moving higher, something I told you was going to happen. And here we are being down some 70 grand. Look where I'm at now. I'm only down 24K. I've been able to do some crumb trades. Not that impressive, but it keeps me active, keeps me motivated that I can get out of this hole. See, that is what makes a great trader, right? Selling that fat premium, getting those fat paychecks are great. What happens when the trade goes against you? That's when you'll find out if you're a great trader. And for me, absolutely love those moments because I know I'm going to be writing some crumb trades and I'm going to be trying to collect a little crumb here, little crumb there. That's what I do. That's what excites me, keeps me in the game. My members get those kind of emails all the time. Transparency to me is nothing because, to be honest with you, I'm just showing you my trades. We talk about them, so maybe you learn something. At the end of the day, it's about you learning something, okay? I'm not here to impress you with the money I make or the trades that I make. I want you to really absorb the information, hear the story, and see if you can use any of that in your trading to make you better. It's all about making yourself better. And that's why I always, before every video, I try to up your game. I literally get behind the mic and say, how am I going to up their game with this video? So look, here's what the members got. This is our first stock. I don't want you to think I'm just rambling here. I'm really excited. I get behind the mic once a week. Our very first stock is going to be a stock I use all the time. AbbVie is a stock that I use for covered call writing and dividend capture, largely because it pays such a large dividend. Now, I absolutely love AbbVie because it's one of the largest pharmaceutical companies on the planet, and it's not a pharmaceutical company with a one-hit wonder drug. AbbVie is a great S&P type company. They have a fat dividend. They trade in the range. And here's the deal. And if I buy the shares, I don't feel worried if the stock were to fall. Very similar to how I felt about JP Morgan last year when I just bought the stock, writing covered calls, doing the dividend capture, was able to keep the shares. We kept writing, and ended up, I think we did about 7 to 8 trades, knocking it down. And AbbVie is one of those stocks where for me, it's a large cap stock. It's great for covered calls because it pays some decent covered call premiums. But for me, it's a 30-day trade. It's a dividend capture trade. So I explain this to the members how I usually trade this, okay? And I try to break it down so you can see the world through my eyes. And in this particular email I sent, I talked about how AbbVie is approaching my 2-week countdown. I'm going to explain this here on the charts, but as you can see here, you can see that I highlight the 2 weeks before its X date. Again, I'm going to explain this. This is my countdown time for which if I'm going to buy a stock for a dividend capture, this is my moment. I want to buy the stock 2 weeks before the X date. I want to write that out of the money covered call so I can have the best chance of having the stock start to rally into the X date. Wall Street wants that fat dividend. Well, I'm the shareholder on record, so I'm able to hold the shares through the X date. I collect the dividend, and then we move towards the other side of the trade. That's 2 weeks later. Hopefully, I can have my shares taken away, and we make double the profits. Let's go to the charts, and I'll show you how I work that. Now, real quick, AbbVie just trades in this range that is pretty darn bankable. I mean, look at that. We're always looking for stocks that trade sideways to higher. That's rule number one. We love that. The second thing we love to do is buy the stocks when they're at their low point or they're hitting support. This gives us the best opportunity to be buying low so we can then sell high, right? How many times have you bought up here and got screwed when the stock falls? That's what happens on Wall Street. They rally them up to resistance, and if they don't break through that resistance and hold resistance, well, guess what? They peel back to what is support, and they'll do it again. This is a game, and that's how I see it. So this is what I love about AbbVie because it trades in that perfect range. Now, looking at that dividend, as you can see, about 2 weeks before that dividend, see how AbbVie peels off? And then as we're approaching the X date, right? They pay over $1. I think they pay about $1.30. That's a fat dividend. Could you imagine Wall Street owning 1 million shares? Just to hold the shares during this time? Well, look at this. It starts to move higher. So Wall Street gets the dividend and that buying pressure, right? Everybody wants in the stock. 2 things can happen after the X date. The stock can peel off because Wall Street then sells the shares. They collected a dividend. They got a little stock move. They sell the shares. They're out of it, but they still get the fat dividend. Or that momentum continues to push higher and they ride it for the next couple weeks. Happens all the time. And you can see this every time we get to that dividend, peels off, runs higher. This is beautiful. AbbVie is perfect for me. So here we are. We're 2 weeks before AbbVie's next dividend. And look what AbbVie's doing. It has rallied to the resistance, didn't stay above resistance for 3 days, peeled off, and now it's working its way back up. Didn't hold that resistance line. It's peeling back. And here we are. We're literally on the Bristol Myers chart when I thought I was on AbbVie. I'm not going to go back and redo this. This is absolutely what I do with Bristol Myers as well. So Bristol Myers and AbbVie are the stocks that I use for covered call and dividend capture. Okay. Yes, I'm live and I'm not going back and redoing this. The AbbVie chart is the same. It rallies, it falls, it gets to the X date, it starts to move higher. We collect that dividend because we are literally the shareholder on record. We own the shares. Now, before I move on, this is how this works. Say, for example, I buy the shares 2 weeks before the X date. I get paid $3 for a 30-day trade. The way this works is this. The call buyer paid $3 to have the right, but not the obligation, to buy my shares at my strike price. The way the call buyer sees this, at X date, right? The night before they go X, they have to make a decision. Are they profitable? Right? If they take ownership of the shares to collect the dividend, are they profitable? Meaning they're going to pay me my strike. They paid me $3. So the stock has to not trade at the strike. It has to trade beyond the premium they paid, and the dividend is not going to cover the premium, because in this case, the dividend might be $1. I got paid $3, plus they're going to pay me the strike, right? So that's how a call buyer will determine if they want to take your shares from you. Now, usually, unless the stock has moved higher and it clears the premium paid, then they will take your shares. And on the night prior to the X date, they come in, they take ownership of your shares, they paid you the strike, they paid you the premium. You are not the owner of the shares, so you do not get the dividend. They will. But that's a 2-week trade that probably banked you some 3 and 4% because you use that momentum of that X date, and the call buyer, it was favorable for them to take your shares. That's the kind of trade I love to do. Now, while we're here with Bristol Myers is my second stock. So AbbVie is number 1 for my covered call and dividend capture. Okay. And if I'm stuck in a down trade with AbbVie, it's okay. AbbVie trades at this range where it doesn't fall off that much. I've done it many times. So when you're looking for a covered call dividend capture trade, I'm looking at AbbVie. Now, you can see here with Bristol Myers, this trade here, I love doubling my dividends and using the 30-day wheelhouse trade, keeping the lights on. And this is a great one in retirement. I'll tell you why. Bristol Myers, one, is $66, and it trades in such a range that back here, it was trading for $66. And guess what? It doesn't look like it's going to get much higher over here. Bristol Myers is one of those great companies that just slowly trades sideways to higher. And you can see the chart. This is beautiful for the 30-day covered call. And in fact, right now, I have a 30-day covered call on Bristol Myers. And I'm about to buy some shares of AbbVie for that trade I just talked about. Bristol Myers is great because, again, we have that trading range. And that's the key, Keltner channel. When a stock trades below the Keltner channel mid, this is when I love to get involved in a stock. I've talked about this all the time. But here's the thing. Once you commit to that, this works with damn near every stock. And the bigger the company, the more mature the company, the bigger the profits, the less they move out of that range. And Bristol Myers is that company. Every single time we could do a wheel trade, we could do a cash secure put, we won't be assigned the shares. Every single time we could write a covered call, have the shares peel off, we keep the premium, we look to do it again. This is one of those trades that we can do every single month, even in earnings season. Now, I know we want to avoid earnings seasons for the 30-day covered call, but with Bristol Myers, it just doesn't move off the charts that much. And we can use these ebbs and flows in the stock move to collect that 3 to 4% perfect covered call trade. Now, I'll tell you this. I also like to double my dividends. Now, I'll be brief on this. I've explained this many times. This doesn't excite most of you. It excites me because it keeps me in the game. Bristol Myers, during its earnings season, we don't trade it, right? That's a golden rule of covered call writing. But understand, there are 2 months of non-events that we could actually use for covered call writing. Now, what I do is this. I want to own Bristol Myers. I don't want my shares taken away. I mean, to be honest with you, I've owned Bristol Myers for 11, 12 years, so I don't want my shares taken away. I would have a large capital gains hit because I think my cost basis is like 28. So for me, what I do is this. When the stock reaches this peak, it isn't shooting higher. It's at the peak or at the top of the Keltner channel. It's more likely it will peel back. Wall Street will sell to get some profits. They peel it back to support before they come back at it. I love to write a covered call right there. I do the 30-day. I do the 30 delta. The 30 delta is a 30% chance it gets to the strike. They pay me about a dividend, right? That 30-day, 30 delta will pay about a Bristol Myers quarterly dividend. I'm able to do this month 1, month 2, let the earnings pass, month 1, month 2, repeat and rinse. We do this with all of our buy and hold stocks. I'm doing it with Pfizer right now. Absolutely love the double my dividend trade. Why? Because the mindset is simple. I am growing my portfolio of wealth. Yes. So for me, these are great trades. I love AbbVie. I love Bristol Myers. Now, my next stock is for you small ball players, and I am currently looking to do another 2,000 share trade. Now look, if you like what you hear, bang the like button, because I have another 3 stocks that I'm going to do next week talking about the wheel, the cash secure put, and how I use both of those for a great straddle trade. If you bang the like button and I get 200, if I get 200 likes before that video, absolutely we'll bring you the juice for that video, because I got some great stocks that I use all the time. Look, my membership is absolutely dirt cheap, man, but I bring it. I bring you great ideas on top of you get to see all the trades I'm talking about. Okay? Talk about being transparent. Every single member sees every single trade I do, whether in and out, and my trade ideas. And oh, by the way, Fridays I'm bringing back the Stock Showdown and Spotlight stocks for covered call writing. Already did a Coca-Cola versus a Verizon. Man, we're getting back into it. I need to get myself excited when I do all of those communications for the members. It gets me jacked because I want to stay in the game. Look, at the end of the day, I make $24,000 a month trading premium. I don't make anything on YouTube, and my memberships are so dirt cheap I put in more work than you could imagine to make sure my members get an upgraded experience. It's all about my trading. And when I'm knocking down $350,000 in premium over the past 5 years, that is the flag in the ground that is proving that I can do this in retirement. And I want you to go over to my website, cptdashboard.com, and get your 1 free month offer. Now look, here we go. Rocket, I talk about this all the time. Rocket is absolutely still trading in this beautiful range. Now, if you're a small ball player, this is great. Rocket trades for 1950, 2150. This is its range. It's recently been a part of the meme crowd, and I'll tell you, last earnings shocked Wall Street, because this earnings blew away the street. This earnings was disappointing. And Rocket Mortgage is in the middle of the current mortgage explosion. But the beautiful thing is this: Wall Street comes back to the stock, and it's a great range-bound stock. You've heard analysts around the world say, well, this stock is range-bound. What does that mean? It trades in a perfect range. And if we can cherry pick the bottom of the range, we can do cash secure puts for which we'll never be assigned the shares. We collect that fat premium. And if we buy the shares there, notice its range has the stock moving higher. Doesn't move that much higher, but in a 30-day window, it'll trade in this range. These are the bankable premiums that we can actually use. Now, here's the key thing. Implied volatility is nothing. You will not wake up, unless the memes get a hold of it, but you will not wake up and feel like you're left holding the bag on Rocket Mortgage, or that the stock rocketed off the charts. This, for me, is my favorite stock right now. I have showed you videos over the years of Rocket Mortgage since they've gone public. This strategy of playing the cash secure put low in the range, and then if I'm assigned the shares, writing the covered call at the mid as it rallies higher to have my shares taken away. Absolutely love Rocket. My last major trade with Rocket was that 2,000 share cash secure put, 2150. I was assigned the shares. The shares fell off hard, and I had to wait. I sat on my hands, and Rocket did what it does. And it got back over 19. It started to move to 21, 22. And I was able to sell a little bit of premium. I was able to buy back one of my covered call options and sell a deep out of the money covered call. And I was able to buy that option back, pocketing $1 full, right? Reducing my cost basis. I'll tell you what, at the end of the day, Rocket is my favorite stock right now. And I'm looking, even though I have 2,000 shares right now, 40 grand, I'm looking to do another 2,000 share trade. And with it trading right now at 1944, the 30-day cash secure put is paying about $1. And with 2,000 shares, that's going to pocket me some $2,000. And this is what I love to do. I'm able to pocket some $2,000 with a stock that is so range bound, it's damn near predictable. And I love it. And that's why I love showing you these 3 great stocks to sell premium with. Now, I know this video went long. Get your 1 free month. Join us because I am doing more and more to try to up your game, man. I'm going to write an email this weekend for Monday morning. Cash Flow Corner is coming. I love Mondays because I try to find those great closed-end funds so we can buy them, collect a monthly per share dividend, putting cash flow on the table. I tell you what, I love this. This is my passion. I want you to subscribe to the channel because I want you to be a part of what we're doing here. Remember, hit me with the 200 likes and I'm bringing you 3 more trades that I use using the wheel strategy, cherry picking cash secure put trades, and the covered call cash secure put straddle. That is next week. I need you to bang that like button because it jacks me up. Hey, look, I'm going to leave it there. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.